the break of this level, which will say goodbye to the 80 relationship of gold silver, will have a disorderly decline. That means super fast, generally, more so than you've seen here. A lot of chop, a lot of up, a lot of down to the 65 zone. And that'll be associated with not gold going up, but silver also within that going up relatively to an increase in gold. That will bring it to the 65 neckline. And when that eventually breaks, you will probably have a pause and a bit of churn period at the 65 level. You will then be let go all the way down to the 30s. So just to put that in context, what does that mean in gold silver price terms? We have a target of 2,900 on gold.
Founder of the Market Sniper Francis Hunt discusses the current market situation, highlighting substantial metal resistance. Francis predicts significant shift in the gold-silver ratio, potentially reaching a point where gold is valued at $3,000 and silver at $90. The silver price made waves in 2020 when it rose above $20 per ounce for the first time in 4 years, and the precious metal has largely stayed above that level since, even passing the $26 mark in May of this year. Many experts in this space expect silver to perform strongly in the years to come. The latest Kitco News weekly gold survey showed that the loss of momentum for the U.S. labor market, even as inflation pressures remain in place, had most market analysts bullish or neutral on gold's prospects for the coming week. This week, 15 Wall Street analysts participated in the Kitco News gold survey. 8 of them, or 53%, said they expect to see higher prices for gold next week, while 6 analysts, or 40%, had a neutral outlook. Only one analyst predicted lower prices for the precious metal over the next 7 days, representing 7% of the total, pretty much close to the 2023 call for gold to double or go to around $3,000 an ounce. Francis envisions silver's exponential rise, potentially to a 1:10 gold-silver ratio. In the 19th century, the average ratio was 15:1, while in modern times, it has mostly ranged between 50:1 and 80:1. Coinage acts like Alexander Hamilton standards in the late 18th century aimed to ensure accurate weights for gold and silver coins. These acts led to more stable ratios in the 20th and 21st centuries, although these are still subject to market forces. Industrial uses influence silver's value, while gold is less susceptible. We will now bring you clips of Francis Hunt from his recent interview with Commodity Culture. Before we proceed further in this video, please make sure to subscribe our channel and click the bell icon to stay updated.
We are leaning up against that level right now, and we have thrown it down. The momentum that we threw it down here, and absolutely here, you are grinding along this range. The break of this level, which will say goodbye to the 80 relationship of gold silver. So technically, give you a little bit of the technical analysis. That comes from a macro bull flag target that we have that will take us to the threshold of 3,000. Incidentally, just as a small point, and I give this for all precious metals people, when we overcame 1,000, we also had 3 touches and then we smashed it on the 4th. And then we never looked back below 1,000. So in the lows of the 2009 era, we were sitting in a period where we tapped up against the $1,000 mark a number of times. This was as QE was being unleashed. You can see it here. That is your 1,000 mark. You put a finger over the 1,000, you touched it one more time, you touched it there, you touched it there, and then the 4th time you smashed it and you went right the way up to 1927, which brings you to the threshold of the 2,000 mark. Now you are here at the 2000 once. That was the run-up, the bull market with the next level of QE, which went from hundreds of billions to trillions, 6 or 7 trillions, right the way up to you made your 3rd knock, and we feel you're about to go upside. I've got a lot of lines on there, so I'll just take them off for a second. And this flag that you can see here, that line there is projecting an up move to the 3,000 mark. So let me just take that off. There you go. And zoom it in a little bit for you because we got a lot of history in there. That'll run you up to just about the 3,000 mark. So if you think 3,000, and when we make the head and shoulder target, I'm giving you a lot of detail here, maybe it's too much, but for that gold silver ratio, if you make that 30 down to the 33s level that the target is implied on that head and shoulders, you're going to have essentially 3,000 gold And if you pause, normally when you make a target, you pause. So you would come down hard down here. You might churn a little bit at 65, and then you go again for a big sell-off and make the 33s target. You're talking about a much better ratio. It's still not 8, but it's 33. So what that would mean, if gold is 3,000, you would divide by 100 and multiply by 3. It's quite simple. So you'd have 30 times 3, you'd have $90 silver by the time that target is made. So if they coincide, that's pretty interesting mass. And then we feel actually you'll go sub double digits. You'll go to a single digit in the gold silver ratio at a point. But I think we'll be in a very different environment in terms of debt, and a very different environment in terms of the buying power of a dollar. But that will lead eventually to triple and even potentially 4 digits. You could have 10,000 gold, and you could be at about 9.99, let's say, on the gold silver ratio, and you'll be at $1,000 silver. So we think silver has been constrained for a very long time, and that when it gets unleashed, it's going to be crypto-esque in terms of its response.
During the interview, Francis explained that gold-silver ratio experienced an extreme spike in 2020, with silver facing substantial devaluation compared to gold. When the COVID-19 pandemic hit, the Fed cut rates down to 0 from 1 to 1.25%. However, rising inflation has led the Fed and other central banks to hike rates, which has negatively impacted gold and silver. In February 2023, the Fed raised rates by just 25 basis points, the smallest hike since March 2022, as Chair Jerome Powell said the process of disinflation has begun. The Fed has continued these small rate hikes since, with the latest coming in July. Meanwhile, Hunt predicts that a key support level for gold and silver is on the verge of breaking in the near future. Many experts believe that silver is undervalued compared to fellow currency metal gold. As discussed, their production and price ratios are currently incredibly disparate. While investment demand is higher for gold, silver has seen increasing time in the limelight in recent years, including a 2021 silver squeeze that saw new entrants to the market join in. Let's get back to interview.
March 2020 was a seminal turning event for a number of markets. So March 2020 was the lockdown events around the thing that may not be mentioned, but that was peak bonds. That was highest valuation in debt. You actually had a 0.3 rate. In other places, you had negative rates. Debt was never more valuable. Everyone panicked. There was fear, and you ran into your government as being the bastion of last resort and the safest place for your money. And that was why rates went so low. And at the same time, you had a gold versus silver ratio super spike that was the exact opposite of that. You got peak devaluation of silver in terms of gold, which was both a hit on gold, but a far larger hit on silver, which is a much thinner market and easy to bully. And you had about 128 ounces. We've never been that high before. Just to be clear, in a mining context, if you speak to Steve Newmeyer or First Majestic or any of these other people that are involved in digging holes in the ground, they will tell you that generally they pull out about 8 ounces. Between 6 and 8 is the range for every ounce of gold they pull out. In fact, silver is so non-economic. If you don't have enough rich enough vein, most silver is pulled out as a byproduct of digging in the ground for something else. Copper, gold, tin, and other things. So it's just a little bonus added extra to boost the bottom line. Probably works in as an important contributor, but they wouldn't do the mine for the silver. That's how low and disproportionately low the silver prices are. So that 128 was a peak blow-off. Technically, in technical analysis, you get blow-offs. And that was this period. That's how bull markets in anything, that's a chart going up, ends. You get a major blow-off, and then you get what we call a slap in the face to the downside. And that brought you right down to a 65 neckline, neckline 65 there, which is a left shoulder. I'm showing you the left shoulder. This is a huge blow-off head, and then we're in a right shoulder here. So that's a head and shoulder reversal pattern on the gold-silver ratio. And this 65 was peak gold. We got through the 2000 the first time, and silver had the Wall Street bets mini pump. I think it might have touched 30 for a second or two, and that was down here. Since then, they've tried to claw back some degree of control, but they will never get to this high again. And in fact, this is now the last dance. The right shoulder is the last weak attempt at a bull market. You'll see this large red dashed line here. The key message that I'm giving, especially to your precious metal fans, is there is a key level of support that is about to surrender in the next fortnight, in my view. Forget the fact that silver got slammed on the open today and all of that. This is churn and chop for the moment. That's that green candle that's rallying there. We have said for an extended period, this broadening pattern that you see here that I've just made there, like that triangle on that bear pole, that's the slap in the face that I'm highlighting, resolves with a break in most instances of this lower line. So I can introduce another color just so that everyone's clear on that. That is going to break. You also have a support level across here. That's very key. So we are now leaning up against this.
Experts predict that the 3-year consolidation is almost complete, and we expect a rally towards $3,000 over the next 12 to 18 months. Gold miners could explode higher, and silver may retest $50. How do you foresee these factors shaping the trajectory of these precious metals in the coming months? Share your thoughts in comments section below. If you find this video informative, don't forget to show your support towards our channel by giving this video a thumbs up and subscribe to our channel, and turn on notifications to stay informed about our latest videos covering more interesting topics. Thank you for watching.